I had a feeling this is where you were going to go in the last week or so. You didn't hide what you thought of this stock. Walk me through where we're going now.
Yeah, we downgraded Deere to underweight this morning on the back of just the perfect storm, as you said, heading into the Midwest. You know, not only are the tariffs resulting in lower soybean exports to China, that's well known, but in the meantime, China has had to kill about 30% of its hog herd because of African swine fever. This will lower demand for beans going forward regardless of the tariffs. And then on top of that, you've got Brazil and Argentina growing record crops, as well as confirmed by the WASDE report last Friday, and currencies in their favor, so they can continue to meet China's lower demand regardless of tariffs again. And then to add insult to injury, last night we got numbers out of the USDA. The U.S. Midwest has only got 30% of its corn crop planted versus a 5-year average of 66%, and it's only got 9% of its soybeans planted. So, you know, if we can't grow crop, we can't get paid for it, and even if we do grow it, the world's awash with burdensome supplies. And so this has been one of the more difficult times and more complex spring seasons that I've seen in my coverage of the agricultural sector.
So, Anne, you mentioned something, and you said it twice, regardless of trade. So regardless of trade, how long before some of these things dissipate, before they fade?
Well, that's a great question. I think things could get a lot worse before they get better. Number one, China has just killed 30% of its hog herd, and that means something close to 20 to 30% less soybean demand this year and likely into next year. I mean, eventually it'll rebuild its hog herd, but in the near term it's going to cut its demand for soybeans. I don't think that this has been baked in correctly yet into soybean prices or into stocks to use. So that's another step down that we've got to see yet. And then, you know, we haven't planted our crop in the Midwest. That could change. Things could get better. Things could get worse. So, you know, I think we're in this period of exceedingly high lack of visibility, for want of a better word. So step down before we step up. Maybe we'll get a bailout, but you got to grow crop to get a bailout, and that'll just compound the supply problem. And
it's really interesting how you navigate this story, because you're not blanket bearish all machinery just because of the trade discussion. This one specifically feels very idiosyncratic and very specific to the agricultural story. Caterpillar, you are still constructive on. Walk our listeners, our viewers, through that, because our audience may not be thinking that way given the trade dispute of the last week.
Yeah, I think that's absolutely fair. I mean, Deere yesterday was trading at 13 times forward earnings, while Caterpillar was trading at 10 times. The difference with Caterpillar, in our view, is that we have not seen any demand destruction for hard commodities. Right? Caterpillar supplies equipment into mining. We've got decent visibility into a replacement cycle for mining equipment over the course of the next 5, 7, even longer number of years, because that sector has been through its downturn, come out of its trough, and now we're looking at slow growth going forward. But we are seeing growth. The difference in agriculture is we're seeing oversupply and demand destruction, and that's very, very different in our view.